This is Alan Bush with ADMIS. In the stock index futures, we did see sharp gains yesterday. This after the FOMC statement was a little more dovish than many analysts had anticipated. Also, some follow-through gains in the overnight trade. This after the Swiss National Bank actually dropped their interest rates to a negative number, with their key interest rate now at a negative 25 basis points. So lower prices as far as Swiss interest rates is concerned, hoping stock index futures with a second day of substantial gains. Also, we feel that other central banks next year are likely to be more accommodative as well. So all of this, I believe, bodes well for the outlook for stock index futures going into 2015. Over in the currencies, the dollar index actually advanced yesterday, even though the Fed statement was a little bit dovish. So the dollar index actually advancing on bearish news, so that has to be viewed as a sign of strength. Also, with the Swiss National Bank cutting rates, that makes the dollar more attractive as well. So that Swiss National Bank rate cut putting a lot of pressure on the Swiss franc. Also, some sympathy weakness coming into the euro currency. However, the commodity currencies, the Australian dollar and the Canadian dollar, advancing as commodity prices recover. Of course, the better prices for commodities, I believe, is directly linked to the FOMC statement yesterday and the Swiss National Bank rate cut. So somewhat better prices in the commodity currencies, but I'm thinking maybe just a couple of days of short covering and consolidation before we see the bear market resuming in both the Australian dollar and the Canadian dollar. Over in the interest rate markets, even though the Fed's statement was dovish, credit markets fell yesterday. I think this is primarily due to the stock index futures that advanced, so we are seeing the inverse relationship between stock index futures and treasuries. And today, another decline in treasuries. However, thinking that we'll probably consolidate for a couple of days, build a base. From there, I think we can see a new leg up in the long end of the curve, especially for the 30-year treasury bonds. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.